Imagine transforming $10,000 into $83,556 over a span of 26 years. Sounds like magic, right? That's the power of investment growth. This isn't a fairy tale, but the real-life story of a portfolio invested in SWPPX. Remember to subscribe and comment on what funds you would like me look into next. The journey wasn't always smooth, with the best year seeing a return of 32.27%, and the worst witnessing a dip of negative 36.72%. Yet the portfolio persevered, exhibiting an impressive compound annual growth rate of 8.45%. But what's more intriguing? Despite the rollercoaster ride of returns, the portfolio's correlation with the market remained strong, standing tall at 0.99. So, how did this magic happen? Let's dive into the journey of our portfolio, exploring its ups and downs, its resilience, and the immense value it offers. Stay tuned. Investing is a lot like a rollercoaster ride, filled with thrilling highs and stomach-churning lows. And indeed, our portfolio here is no exception. It began with a modest $10,000, and over the course of 26 years, experienced a wild ride that saw it grow to a whopping $83,556. That's an impressive compound annual growth rate of 8.45%. However, like any roller coaster, this ride had its share of twists and turns. The volatility of this portfolio, marked by a standard deviation of 15.6%, was a testament to that. There were years of exhilarating ascents, like the one where it saw a return of 32.27%. But what goes up must come down. The portfolio also had its years of free falls, the worst of which saw a decline of negative 36.72%. And let's not forget about the drawdowns. The most severe one occurred from January to September 2022. It was a 9-month-long plunge that resulted in a decrease of 23.87% in the portfolio's value. It was a tough ride, taking over a year for the portfolio to fully recover. But remember, volatility is not always a bad thing. It's part and parcel of the investing game. And with a sharp ratio of 0.48, the risk-adjusted return of this portfolio, though relatively low, was still within an acceptable range. The Sortino ratio of 0.69 further confirmed the portfolio's ability to weather the downside volatility. So, yes, investing is indeed a rollercoaster ride. It's a journey filled with ups and downs, twists and turns, and sometimes unexpected surprises. But despite the rollercoaster ride, the portfolio has demonstrated remarkable resilience, bouncing back from every low. Just like a roller coaster, it's not about the falls. It's about enjoying the ride and looking forward to the next climb. Our portfolio's resilience is not a fluke. It's largely due to its investment in SWPPX. The Schwab S&P 500 Index, or SWPPX, is a fund that has proven its mettle time and time again, demonstrating a robust performance history over the past 26 years. With an initial investment of $10,000, it has grown to a whopping $83,556. That's an impressive compound annual growth rate of 8.45%. But it's not all smooth sailing. Like any investment, SWPPX has seen its share of volatility, with a standard deviation of 15.60%. It's had its ups and downs, its best year yielding a return of 32.27%, and its worst, a decline of negative 36.72%. What's notable, however, is how closely SWPPX tracks the market. Its correlation with the market stands at 0.99, almost a perfect match. And yet, it offers a relatively low risk-adjusted return, with a Sharpe ratio of 0.48 and a Sortino ratio of 0.69, providing insight into its downside volatility. Over the years, SWPPX has weathered multiple drawdown periods, some lasting a mere month, others extending up to 9 months. The largest drawdown in 2022 saw a decline of 23.87% in portfolio value. It took over a year to bounce back, but bounce back it did. Despite these drawdowns, the portfolio recouped its losses, demonstrating the resilience of SWPPX. It's a testament to the fund's potential and the power of staying the course in investing. And here's the kicker. SWPPX is one of the least expensive options out there, boasting an expense ratio of just 0.02% and a current dividend yield of 1.34%. Investing in SWPX is not just about surviving the lows, but also about thriving in the highs. So, what's so special about SWPX? Let's talk about its value. SWPX boasts an incredibly low expense ratio of just 0.02%, making it one of the most cost-effective ways to invest in the S&P 500. In the world of finance, every penny counts, and this low expense ratio can make a significant difference over time. But the value of SWPX doesn't stop there. It also offers a current dividend yield of 1.34%, a nice little bonus for investors. Now, when you compare SWPPX to other funds like VOO has an expense ratio of 0.03%, or FXAIIs that has a low expense ratio of 0.015%, and SPY that has an expense ratio of 0.09%, you'll find that their returns are quite similar. But what sets SWPX apart is its price. It's one of the least expensive options out there. In the world of investing, SWPX stands out as a high performer with a low price tag. It's the perfect choice for those seeking to invest in the S&P 500. Thank you for watching, and subscribe and comment on what fund you would like me to make a video on next.